Welcome's lecture on deemed supplies of services. As with Articles 16 and 18, that's the deemed supply of goods rules, there are rules which require and allow member states to treat transactions without consideration as a supply of services. Hence, VAT is due on these deemed supply of services. So Article 16 is the mandatory deemed supply of goods. Article 18 is the optional deemed supply of goods. And what we're going to look at in this lecture is the equivalent provisions, 26 and 27, which apply to services, deemed supply of services. Now, Article 26.1 provides that the following transactions shall be treated as supply of services for consideration. Now, shall means Article 26.1 is the mandatory deemed supply. There is no consideration, but Article 26.1 deems there to be. Now, 26.1a, the use of goods forming part of the assets of a business for private use of a taxable person or his staff, or more generally for the purposes other than for those of his business, where the VAT on such goods was wholly or partly deductible. So Article 26.1a is about use of goods. If the goods were being given, then that is a deemed supply of goods. But if the person is only being able to use the goods, so if effectively the business still owns the goods, then we have a deemed supply of services, but only if the business has deducted input tax on the purchase of those goods. Now, 26.1b, the deemed supply can also apply for the supply of services carried out free of charge by a taxable person for his private use or for that of his staff, or more generally for the purposes other than those of business. And that free of charge is very important. In the case of Hotel Scandic, the authorities tried to apply deemed supply when staff are paying slightly less than they probably should have done for staff meals. And the authorities were trying to apply this as a deemed supply, but you can't, because deemed supplies do not apply if there's consideration. So if there's consideration, you always go with the consideration. There are occasions when the VAT Directive provides for market value, but there isn't a general market value rule. So if there is consideration, we are not thinking about the deemed supply rules. They just don't apply. Article 26.2 allows member states to derogate from paragraph 1, provided that such derogation does not lead to a distortion of competition. Now, there is some flexibility, therefore, in how these provisions are introduced. They must be introduced, but how they're introduced, there is a degree of flexibility. Just like Article 74 provided the detail for valuation of deemed supply of goods, Article 75 provides the valuation for deemed supply of services. And the valuation rules are full cost to the taxable person in providing those services. So what did it cost to provide those services, the use of the goods, those free of charge services? Within Article 26.1a, there's a very important provision that for there to be a deemed supply of services on the use of goods, input tax must have been recovered on the purchase of those goods. Now, the case of Kühne considered whether German law was compliant with Article 26. Now, German law imposed an output tax charge on the private use of business assets without restricting it to circumstances where input tax had been recovered. Now, in this particular case, the taxpayer had purchased a car from a private individual, hence no VAT was paid on the purchase, and the German authorities, in accordance with their law, imposed a tax charge on the private use of the car, so deemed supply of services in their law. Now, the case was referred to the European courts, and the European Court ruled that this was not in accordance with Article 26.1, as VAT was not charged on the purchase. And as it wasn't charged on the purchase, the taxpayer had not recovered VAT on the purchase. As such, Article 26.1 just does not apply. So in this case, the taxpayer would have been able to rely on direct effect. The directive is something the taxpayer can rely on. Now, within the deemed supply of services rules, there is this provision within Article 26 where if the use is for the purpose of business, the deemed supply of services rules just do not apply. Now, in the Julius Fillibeck case, a German construction company provided transport for employees to travel from their homes to sites they were working on. The tax authority assessed this as a deemed supply of services, as there is private consumption of bought-in services. Seems fair enough. That's what these deemed supply rules are for. Now, the UCJ ruled that the provision of free transport could be within the deemed supply of services rules. However, it was possible for it only to be provided for purposes of business. And if this was the case, there would be no deemed supply. For example, if the location of the employer was remote, or transport links made the employer's location particularly difficult to get to, the employer might struggle to attract staff. A way around it for the employer might be to provide transport for workers to get to work. And if that was the case, then you could see how this could be providing transport for workers for a business purpose, i.e. no deemed supply. The Danfoss case examined the use for purpose of business within the Article 26 deemed supply of services rules. If the actual usage is for the purpose of business, there is no deemed supply of services. Now, in Danfoss, the employer provided free meals to employees and business contacts. The tax authorities assessed this as a deemed supply of services. Now, the European Court ruled that provision of free meals could be within the deemed supply of services rules. However, there could be circumstances where they are provided for business purposes. For example, the efficient running of a business meeting. You might have an all-day meeting with a very important customer or supplier. And you don't want to break for lunch, you don't want to go out for lunch, so lunch is bought in. Now, that is not necessarily within the deemed supply of services rules. It's provided to make that business meeting run more smoothly. If the circumstances are slightly different, let's say you just had an all-day business meeting and you get to, let's say, 5 or 6 o'clock and you decide to go out and have an evening meal, then that's not something which would meet this for the purpose of business test. It really must be integral to the meeting itself to get this business purpose under the Danfoss principles. The case of VNLTO examined the different element to the Article 26 deemed supply of services rules. In this case, an agricultural organisation carried on non-business activities and incurred VAT on goods bought for these non-business activities. Now, the taxpayer claimed it could recover the input tax on the purchase of these goods as they would be making a deemed supply of services on the non-business use of these goods. They almost seem to ignore the fact that they bought these goods for non-business activity. They tried to establish, well, actually, there's going to be a deemed supply of services rules on these, if you let us recover the input tax, of course, and therefore we can recover the input tax. It just seemed a circular argument. Now, the European Court held that deemed supply provisions operate from the starting assumption that inputs have been incurred in the course of business. There is then a deemed supply under Article 26 if they are subsequently put to non-business use. You cannot treat the non-business use as something which justifies the input tax recovery in the first place. In effect, the input tax recovery comes first. You've got to ask yourself, can I recover the input tax? And if the answer is yes, then you recover it. But if they're subsequently put to a non-business use, then the deemed supply rules will kick in there. So VNLTO, a very important case in that legislation. Many member states have used for many years the Lennart's principle, and VNLTO was very much part of the process of the dwindling of importance of the Lennart's principle. The Lennart's principle is effectively recovering all the VAT up front and then accounting for a deemed supply on the non-business usage going forward. The case of sealing concerned an Article 26 deemed supply of services rule, but this time on a house, which was used partly for business purposes and partly as a house. The general authorities treated the residential use as a deemed supply within Article 26. That's fair enough. They also believed that as the deemed supply related to residential letting, it was an exempt deemed supply. And as they were deemed to make an exempt supply, that restricted the taxpayer's input tax recovery on the capital cost of the property. Now, the European Court held that the private use of the house was a deemed supply of services, for sure, but exemption can only apply to real supplies. So consequently, the taxpayer could recover all the input tax on the capital cost of the building, and they must account for output tax on the deemed supply of services on the private element over a period of years, i.e. the private usage over a period of years. Now this creates a distinct cash flow advantage. The taxpayer recovers all the VAT up front and then effectively drip feeds back to the authorities the element relating to private use over a number of years. The Puffer case was very similar to the Sealing case. Both concerned an Article 26 deemed supply of services on a house which was used partly for business purposes and partly as a house. In the Puffer case, the house was predominantly private purposes, so 89% used as a private residence and only 11% for business. But the ACJ still held that this was a deemed supply. So as in the case of Sealing, the trader could recover all the input tax on the capital cost of the building, even though only 11% of it was going to be used for business purposes. And then the taxpayer would account for output tax on the deemed supply of services over a period of years. And now this would create a significant cash flow advantage for the taxpayer. Many saw this as an interest-free loan from the authorities. You recover all the VAT up front, and then you drip feed back over a number of years the deemed supply of services element, so the private element. A new European technical directive was introduced with the latest date of 1st January 11, which permitted member states to exclude the upfront deduction of input tax in the circumstances of Sealing and Puffer. Now what that means, if there's no input tax deduction up front, there is no deemed supply of services. So when this is introduced in the member states, for example in the UK, you can't apply this principle to property, ships and aircraft. You would have to apportion the input tax up front. You can't recover the non-business element with a deemed supply to follow. You look at the business proportion and you recover that, and therefore you haven't recovered on the private element, and therefore on the private element there's no deemed supply. And it's really been introduced to get round the problems that Sealing and Puffer pinpointed, i.e. full recovery up front when there wasn't that much business use, and then they drip fed the input tax back as a deemed supply over many, many years. That's now been stopped by this new European directive introduced in various member states, not always on the same assets because there was an element of flexibility in it. But in the UK, for example, you cannot do this rule, and you cannot get the benefit of Sealing and Puffer, for example, on property, ships and aircraft. We've considered Article 26, the mandatory deemed supply of services rule. Article 27 gives member states the option of treating a number of further transactions as deemed supplies of services. So this is the optional deemed supply of services, the equivalent of Article 18 for goods. Now, Article 27 can impose a VAT charge where a taxed person creates something which, if purchased from a supplier, would be a service on which VAT was charged but would not be wholly recoverable. For example, partially exempt traders using own employees. Now, the difference between Article 27 and Article 18 is that in 27, member states must consult with the VAT committee before introducing such an optional rule. Now, this is different to Article 18, the deemed supply of goods, the optional deemed supply of goods, where the introduction of that was left to the individual countries. They didn't have to consult with the VAT committee before introducing a deemed supply under Article 18. Article 27, the member states must consult with the VAT committee. Well, that concludes the lecture on deemed supply of services.